Insta Financials, and others. Now, I take a privilege of introducing our other speaker for the day, CA Rajesh sir, who is one of the top chartered accountants in practice. He is partner at Venu and Vinay Chartered Accounts and proprietor of RKTR and Co. Chartered Accountants. He is practicing in the field of indirect taxes at Bengaluru for more than 20 years and advising clients on compliances, tax planning, and representation to government and authorities. He has authored number of books on GST, central exercise, service, tax, KVAT as author, joint author, as well as assisting author. To name some of the books, Handbook on Annual Returns and GST Audit, GST RERA, GST Tariff, Practical Guide to Service Tax, Central Excise Made Simple, Central Excise Law, and Procedures and KVAT Audit Manuals. He has also contributed for background material on GST and UAE VAT published by ICAI. He has been training the professional students, industry, and departmental authorities in the field of indirect taxes on invitations from ICAI, ICSI, NACIN, tax departments of state and central, educational institutions, trade bodies, professional bodies, and many more. Written many articles on central excise, service tax, VAT, and GST for various professional journals. Now, I take privilege of introducing our other speaker of the day, CA Ashika Madam. She is Senior Manager, GST Department in Venu and Vinay from January 2021. She became an associated member of ICAI in 2013. She joined as an consultant in GSAP and Co. in March 2014 and had a comprehensive exposure to the GST ranging from examination of taxability, compliance, verification, adjusting and appeal and representation at all levels. She was a member of editorial board of a GST monthly bulletin by a name Tax Talk, which is read by almost 30,000 plus chartered accountants and others. From these experts, let us learn more about how the taxation to be charged from RWA, expensive exclusion from the levy collections, GST tax structuring and optimization, computational and equalization of levy from members where GST is applicable, vice versa, GST not applicable. Now, I request Venu sir to take over from here. Thank you.
Thank you, Vishwas, and welcome everyone for today's session. As the topic says, it is Resident Welfare Association. Every person who is connected with the development of apartments, one or the other point, at one point or the other time, has to form an association, hand it over to the association. In fact, most builders also maintain the association for some period, maybe 2 years, 4 years, depending on the multiple phases of the project that goes on. So today, we are going to cover on the taxation aspect for Resident Welfare Association. And with me, I have my other colleagues, Rajesh sir and Ashika. They will be joining. Sir, whenever you are available, please add your points. And I will be beginning the session. Rajesh sir?
When you go ahead, we are listening.
Yeah.
Whenever the point comes, we'll add. We'll join also.
All right. So, when it comes to taxation of Resident Welfare Association, we are talking about the taxability that is going to come on the association, which means it is on all the members of the association. Many people have a belief that the taxation will not be applicable on a mutuality concept. We will be taking those aspects also. Because the association is not for a profit organization. Hence, it's equally important that an organization where there is not for a profit, will at all there be a levy? Are there any exemptions that have been given? We will see some examples. Is there a possibility that we can optimize the cost and the taxation? Can the transactions be split? How would that happen? Is what we are going to see. Feel free to put your questions in your question or chat box. At the end, we can have also an interactive session and look at the questions. When it comes to the GST, when we say levy, Section 9 of the Act says that for every supply of goods or services and or both, whether it is a supply of goods or services, there shall be a levy. There are two types of levy I want you to be very watchful of, which are highlighted in a green color. 9 subsection 1, we generally call it as forward charge. 9 subsection 3, which is called as a reverse charge. The primary difference between both is 9 subsection 1 is a levy which happens on the sale of goods or sale of services, which is outward related supply. 9 subsection 3 is a levy which is on the consumption. Whenever you are making a purchase, you would be paying the taxes. Again, in the due course, I'll give little more about it. But the moot question that comes is GST is levied on supply of goods or services. The question that comes is, in a resident welfare association, is at all there is any supply of goods or services? Let's take an apartment with a complex with 100 buildings, 100 units. All that the association do is maintain the common area, and which includes, there could be a security at the entrance, which could be gardening, common lighting, common water, and maybe painting, upgrade, maintenance, all the activities. None of this is done by an external entity. It is done by Resident Welfare Association through an external entity. They procure the services of external entity. Because there are 100 people living, instead of each one saying that, okay, I will do it, and what if that person doesn't do? So all the 100 unit owners come together, form an association. Had it been my house, I will still have to maintain. Now it is an extended version of my house. So all of us together form an association, now which becomes an independent body. It becomes an independent body the moment we form an association. Hence, that independent body is to be treated as a person providing the supply. To whom? To all the 100 members. The question that again comes up is like, we are not selling to anything to external persons. We 100 are together servicing, taking care of our own building. How can that be a supply? So just to understand that, I will be moving little bit on the definition of the supply, where section 7 says that the supply, which is on an inclusive, says there are two angles that you need to see, which is supply includes sale, transfer, barter, exchange, lease, rentals, all disposal, everything. So anything which is done is treated as a supply. Second, and the activities which are done or the transactions which are done by a person who is other than an individual to its members, which is RWA to its members or constituents, is also be treated as supply. In fact, this was an amendment that has come in after the judgment of the Calcutta High Court in the Supreme Court, where they said that when there is a transactions between the members, there cannot be treated as a supply. I am not making it is not a for-profit organization. To augment that and ensure that the litigations are put to a rest, 7AA has been inserted and they said this is a supply. The question people may also ask is, I would agree that this would be a supply if I am a business entity. If I am a business entity, if I am not a business entity, how can this be treated as a supply? Let me take you to two other definitions, which is 2 subsection 17 of the Act, which talks about business entity. And it has various clauses. One of the clause it says, any provision by a club association is also treated as a business. Now, in a common parlance, in a normal layman understanding, we don't treat these transactions as a business, but for the purpose of GST, it has to be treated as a business. Hence, the supply is taxable. Now, who is a person who is like, I am 100 units, all of us are together. Who is the one whom you want to tax? It's like we have come together. We all are one body. So the law also recognizes that when you form an association of persons, that association of persons would be treated as a body of individuals. So now with this, we have established RWA is an independent entity which fulfills all the ingredients of the items that has been defined to test whether there can be applicability of GST. With this, it is clear that the GST is applicable on the services procured and given to its own members. There is a levy of GST. Now let's see, if at all there is a levy of GST, what is the rate, what is the classification? And for sure, if you don't know any of the ingredients, what is the nature of the supply, what is the rate of tax, what is the valuation mechanism? If these ingredients do not exist, you cannot identify in any transaction, again, levy would fail. Now, let's say having established that there can be a levy, let's look at the ingredients that would come in. And I'm straight going to an exemption notification. Considering this argument saying that I am a not-for-profit organization, I'm not making sale to anyone, the government also gave an exemption. The exemptions are to be looked into notification 12/2017. Please note, this is an exemption towards service, not goods. Under GST, if you have to tax any transaction, it has to be either supply of goods or supply of service. In a resident welfare association, most of the supplies, what is it? You have a security guard, you have a housekeeping, cleaning, maintenance, a gardener. All those activities are services. You procure water, which is goods. Electricity under the Act is the goods. You also procure cleaning materials and consumables. So there are a combination of goods, there are a combination of services. Now, eventually what it is, by virtue of Schedule 2 of the GST Act, there is been a definition which said that classification of those entries read with Section 8 of the Act, where there are multiple supplies, and if one of the supply can be treated as a principal supply, it will form a composite supply. So the activities which is carried by a resident welfare association is to be treated as supply of service. Even though there are goods that are supplied, services that are supplied, eventually this would be treated as supply of service. Given that it is a supply of service, we refer to the exemption entry 12/2017. Here, the entry number 77, where they give an exemption to a housing or residential complex. The first ingredients to test is classification. The classification which has to be seen is 9995. This is a 4-digit. At little deeper, 999598. It is a supply of the services by a home owners association. basically the services which are provided by members to its members. So unincorporated, whether or not registered body providing services to its members organization falls under the chapter 9995. Under that, there are again sub-classification. So a RWA will be raising an invoice 999598 as their classification include. Now, what is that they are supplying and what is the exemption? The plain reading of the exemption, entry 77, which says services by an unincorporated body or a non-profit entity registered under any law for timing in place. Now we are starting with an unincorporated body, again registered under any law for timing in force, to its members by way of reimbursement of charge or share of contribution, could be as a trade union or providing carrying out an activity which is exempt. Very importantly, exempt what? Up to an amount of 7,500 per month. In fact, originally it was 5,000, and after 25th GST Council meeting, the limit got enhanced to 7,500. And please pay attention, this 7,500 is per month per member. It is 7,500 per month per member. Now, for what? For sourcing of goods and services from a third person for the common use of its members in a housing society or a residential complex. I am further breaking this. Who should be the provider to claim an exemption? It should be an unincorporated non-corporate entity, which is your RWA. It is not for profit entity. It is not going to make any money. Whatever the surplus it is going to get, it is again put back to all those 100 units. And who should receive? The services should be received only by its members. Let's say this RWA has a commercial place which is given on rent to a dispensary or a grocery shop. The rent that is collected, let's say 5,000 rupees per month, I am collecting rent from that unit, which is less than 7,500 rupees, one of the unit complex. Still, this limit wouldn't be applicable there because it is limit is given as 7,500 rupees for services provided to its members. If a service is provided to someone else other than its members, again, this entry is not applicable. Point number one. Point number two, what should be the service? Service is provided by way of reimbursement of the charges. That means, as an RWA, I am incurring some cost and I am getting it reimbursed. If an RWA itself is providing that services, please note, if an RWA itself is providing that services, again, this exemption is not applicable. What is that? That could be an RWA providing services to its members. Let's say the RWA has a commercial, not a commercial complex, extra space which can be used for birthday parties and functions by a member. And let's say 2,000 rupees is charged per day. 2,000 rupees is charged per day. Let us say that the maintenance charges which is collected for them from the member is 5,000 rupees per month. In any month, one of the member has utilized the community hall and paying 2,000 rupees. That 5,000 plus 2,000 is still well within the limit of 7,500. Is the exemption applicable? Answer is no. Exemption is applicable only if it is a reimbursement of the charges as a share of contribution. And again, if you look at the actual entry, it says per month for sourcing goods or services from a third person. So I have sourced the goods or services from a third person for which I am taking the reimbursement. Only there the exemption that would be applicable. So the exemption would not be applicable if the services is provided to a person other than the member. Exemption would not be applicable if the service is provided to the member, not out of reimbursement, but service is provided as a principal to principal basis. This exemption cannot be applied. Rajesh sir, anything you would like to add before I move? Okay. So sir is in department. He will add his comments little later. Unincorporated body, because these words are there. Unincorporated body means and not a legal personality, which is like distinct private limited company, nothing like that. So it is 100 members together collectively there. And non-profit means the surplus, any business, the surplus, it can generate the surplus. And here, whatever is the surplus, it is only for the members. In fact, they decide per month, let us, if it is a smaller apartment, they say 5,000, 6,000 per month. Bigger complex, let's say 4 rupees per square feet, 5 rupees per carpet area. So they collect it. And how do they decide this 4 rupees, 5 rupees or 5,000? Whatever the expenses which are incurred, likely to be incurred once in a year, lift AMC, once in a year, building upkeep, plumbing, upkeep, maintenance, monthly activities, and averaged by number of houses, number of members, averaged by carpet area in each of the house. That is how it will be carried out. Now, while computing this, the exemption, should I say in a complex, if there are 4 units, 4 towers, should I need to look at tower wise or should I need to look at all in together? It is depending on how the association, who is maintaining the towers. Generally, in a 2 towers, 3 towers, they would be looking of all the activities that are required. But when which is like large complex, maybe you have around within the compound itself, that itself like is a mini town or mini city. You have some 25, 30 complexes which been constructed over the thing. So where each of the complex would look at their activities. So you have to look at how this society and association is formed. Taxation would come in accordingly. Now, apart from that, there is another exemption that one needs to be mindful of. What is the other exemption that is there? We have a general exemption under the law, which says up to 20 lakh rupees, you don't need to have a GST registration. So when I say up to 20 lakhs, you don't need to have a GST registration. It means that my monthly collections from a member doesn't matter. Let's say I have only 10 houses. Each of them is paying 10,000 rupees. 10 houses, each of them is paying 10,000 rupees, which means every month I'm getting 1 lakh rupees. 12 months, I'm getting 12 lakh rupees, which is way within the limit of 20 lakhs. So the GST applicability will not come. So on the upper limit, if my collections is less than 20 lakhs, GST doesn't come. If my collections is more than 20 lakhs, then the GST would be looked at is what is the monthly amount that you are collecting. Let's say I have 100 houses. Each of the house is paying me 5,000 rupees, which means 5 lakhs per month. In a 12 months, it is 60 lakhs, which is way about 20 lakhs. However, my monthly collection is less than 5,000 rupees. Hence, it will not form part of my the taxable limit. Taxable limit is 7,500. Then I don't need to pay tax. Whenever I don't need to pay tax, I don't need to register for GST also. So exemption is there for where you don't have a liability to pay tax. There is no liability to register for GST also. Now, what are the things that I have to include and exclude for the purpose of levy? At this point, if you have any questions, you can put your questions in the chat. Now, there are people who ask, should I need to include water, electricity? Do I need to do some exclusion, inclusion? Okay. Please do not go by the understanding which is pardon me? Yeah. Please do not go by the understanding, the thing shown on the screen that exclude means these are to be excluded. Exclusion, inclusion here is clearly about what does the common area means? Would my common area cost, does the common area cost include for all the members? If it is not for all the members, then not to be included. If it is for all the members, then it has to be included. Let's say, what is that when I say for all the members or not all the members? In this example of I will start with the property tax and water tax, which is two types you can find, the property tax and water tax. Generally, electricity is for full apartment. Electricity could also be for a specific house, for a specific house. Now, there could be a situations where one of the tenant doesn't stay here, one of the tenant doesn't stay here, where he will say that, hey, look, can you pay my electricity bill? Now, RWA is formed for their own activities. So RWA would say, yes, I can pay the electricity bill. And every month, the bill that comes for that unit 301 is paid by the RWA, and RWA collects from the member. Now, is that an activity of a supply? Answer is no. It is doing a pure agent services, like the liability to pay that electricity bill is of that unit 301, but facilitated by the RWA. Let's say you are collecting sinking fund. You will you need to maintain the building painting once in 5 years. Along with the monthly house collection, you are also collecting sinking fund once in a period. Could be monthly or once in a year. Even that is a tax liability. Anything in the name of maintenance and repair is taxable. The area pertaining to common, specific, the car park, other things also applicable. If you are taking care of any other activities at swimming pool, cleaning, all those would be applicable. What is not applicable is anything which is specific to a house. An activity that you are doing specific to a house would not be applicable. Anything which is not specific to a house, anything which is not specific to a, which is common, it is taxable. Let's look at a small example. Let's say there is a residential complex where the maintenance of the flats rate are two types of categories. Category 1, where the rate is 4,500 for each of the flat. Category 2, where the rate is 8,000 rupees for each of the flat. Now, is the GST leviable on both the units? Answer is no. GST is leviable on only on the unit 2 and no levy on the unit 1. The question that comes is, when there is a levy of GST on unit 2, is it applicable on entire 8,000 rupees, or is it applicable on the value which is over and above 8,000, which is 7,500 minus this? Answer is two things. Given that it is only one person handling this, there might be a question that may come. See, can it be a single member? So will there be a levy of GST on 13,500? Even this question also can come up. Maybe members can put in the chat, what is your answer to this? Whatever you are seeing in the screen, what do you think would be your answer? 13,500, 8,000, or only 500 rupees? There could be three different answers. If you think that there could be a fourth answer, you can give the fourth answer also. So Maya is saying 8,000 rupees. Okay. Two people feel it is 8,000 rupees. Well, majority of the people feel 8,000 rupees. Now, let's look at firstly, why not 13,500 since it's a single person? The answer is no, because each flat should be treated as a member. Flat, even though the owner of 2 flats is only 1 person, each flat should be treated as a member. Second, GST is leviable where the amount is exceeding 7,500. Now, amount that is exceeding 7,500 is only 500 rupees. There is a belief and again judgment which is there in Tamil Nadu High Court, and a press release, not a press release, reference material given, guidance note given by the CBIC also said 700. But we have a circular. The circular issued by CBIC says the levy should be on 8,000. Now, is this settled? Do we have a clear answer on this? Answer is no. Litigatable. Now, what are members most people doing? If you notice, RWA is an elected body from the members. Year over year, they get elected and people change. 5 years later, when there is a levy that is going to come, who will be bearing the cost? To avoid the litigation. And my always suggestion would be, whenever you have a doubt on claiming exemptions, do a strict interpretation of the law. And here, any amount that is exceeding 7,500, the levy would apply. Read that 8,000 has exceeded 7,500, hence the levy would be on 8,000 and not 5,000. As Gautam, Ravi and Maya, others have answered, gave a perfect answer that it is 8,000 rupees, which is the most acceptable answer. Let's look at another scenario. Here, sorry. In this scenario, in this scenario, the flat is used as his place of business. After COVID, most of us know the work from home is predominant. In 3.5 or 3 BHK, 1 BHK or the half BHK is converted into a house, a workspace. In fact, most of the people who doesn't need a godown. So let's say I am doing business over the phone. I do crores of business. I tell my buyer saying that this is the location, and I tell my seller, drop the goods here, everything over the phone. The question that comes is, the flat is used for business and the monthly maintenance is less than 4,500. Since the flat is used for commercial purposes, would the GST be applicable on this? What is your answer? In fact, Gautam has given his answer saying that yes, GST would be applicable on this. What do others feel? Will the GST be applicable? Ravi says no. Chanjayal VP says yes. Any other views by anyone? The trick point is, it's a commercial activity. That is where the issue comes up. Now the problem has become, we have 50-50, 2 people say yes, 2 people say no. At least if 3 people have said yes and 1 no, I would have gone that India is a democratic country, majority wins. But here we are a tie break. Now let me give you my view. Now, if even before giving the view, let me take you back the entry. Let's look at the exemption entry. What does the exemption entry say? Exemption entry says that the services by an unincorporated body to its members for sourcing goods and services for the common use of members in a housing society or a residential complex. Now look at what is the question in the discussion. The question here is, A is using for business, but he is still there in that residential complex. Since he is a part of a residential complex and is a member, hence the exemption would be applicable for this 4,500 rupees which is collected. So the 4,500 would not be subjected to GST. It would continue to the exemption limit. Next, the RWA is collecting 1,000 rupees per month for gym for the flat owners who are using the same. Then community hall charges is being collected. And let us say the maintenance which is collected from the members, is 5,000 rupees. Now, apart from this, they are collecting 5,000 rupees. Now, the question that comes is, this 1,000 per month for gym which is collected, is it part of 7,500? Community hall charges, is it part of the 7,500? And if there is an owner who is changing one, selling the flat, they collect some charges. So will it be forming part of that monthly maintenance 7,500? Ravi says no. Let's look at others. If you say maybe under A, B, C, 3 or 2 might be a part of 7.5 and 1 might be not part of 7.5, that's okay. You can give your views. And by the way, I encourage to say something whether yes or no, because there is no competition of giving a prize to the right answer, but it allows you to think and also justify that why your thinking was wrong or what could have been the better thing. Maya says no. Chanajal says 1 and 2 will come under 7,500 limit. Gautam says no, all this should be forming part of 7,500 limit. Okay, let me give you my view. Again, if I go back to the original definition, if goods and services are procured for the common use and it is claimed as a reimbursement, hence that 7,500 is applicable. Point number 1, when this 1,000 rupees per month for the gym is collected from every house, irrespective of number of members in the house, then it would be forming part of 7,500. If you are giving as an option whether if you want to join the gym, you pay 1,000. If you don't want, it's okay. Then what is happening? The supply of service is happening on a principal to principal basis. It is not a reimbursement of expenditure. Hence, it cannot be forming part of 7,500. Second, the community hall charge. Whomsoever is using the community hall, only they are paying. Hence, it cannot be forming part of 7,500. The name change. I have to, as a society, in my register records, I have to do some activity. I am charging whenever a person is selling this unit to others. There might be some damages in incoming or outgoing. I am charging something. Again, these are principal to principal. Hence, it cannot be forming part of 7,500. Any money these which are collected, even though this is 1,000 rupees, whatever GST levy would be applicable for these activities. Next, there is a one-time maintenance deposit which is pooled to the common maintenance. Two situations. Again, most builders at the time of registration itself, they will say 1 lakh rupees I will collect, 50,000 rupees I will collect, and I will maintain it for 2 years, 3 years. At the end of that period, I will give the accounts and the balance to the association. Whatever the money that is left, I will give it to the association. The question that is this one-time money that is collected, will it be treated, will it be taxable? And the leftover, let's say out of 1 lakh rupees at the end of the 2 year, when the association is formed, the builder is handing over some 20,000-30,000 rupees each for each flat to the association. Will that be applicable to GST? The answer to it, firstly, when the upfront one-time maintenance which is collected by the builder, it is subject to the GST. It is subject to the GST. And if this leftover money is handed over back to the association, It is subject to the GST when it is applied. Right now, when it is handed over, there cannot be any income to be treated as the association. So hope you're clear on this. Any doubts to anyone? Next, I'll move to ITC. Then last, I'll talk on the optimization. So just to summarize, one-time deposit, which is for the future use, only when it is put to use, it is leviable. Monthly is leviable. If I'm taking any deposit in the name of sinking fund, whatever, if it is refundable, then no GST. But there is no concept of refundable. They will all treat it as non-refundable deposit, put it as corpus, whatever. GST would be leviable. There are a couple of cases. Of course, this in the interest of time and the complexity of the thing, I wouldn't discuss now. But these are the fit cases which, before taking any decision, I would want people to association to consider these and take a decision. Now, when it comes to the input tax credit, can they avail the input tax credit? The answer is yes, because every registered person subject to those conditions can avail input tax credit if it is used or intended to be used in the business. We said that RWA is a person, registered person, the activity they are doing is the business. Hence, they are eligible to avail the input tax credit. Now, how do they avail the input tax credit? There are three things that one needs to be looking at. If there is a credit exclusively relating to taxable supplies, the taxable supplies which include the specific consumption to the members who are paying maintenance fees more than 7,500, the consumption towards, let's say, gym, community hall, where you can identify that this is the goods and services procured towards that activity, 100% you can take input tax credit. Let's say if you have all units which is less than 7,500, whatever the consumption that you are having towards those units which is less than 7,500, 100% you cannot take the credit. But in one apartment, okay, I have 100 units, 60 units are less than 7,500 and 40 units are more than 7,500. In such a scenario, how do I do? That is something called Rule 42. Whatever is the collections in the month, let's say hypothetically, I have around 10 lakh collections, of which 5 lakhs is from units more than 7,500. 5 is a wrong number. Let's say 6 lakhs is from units more than 7,500. 4 lakhs is from units less than 7,500, which means taxable supply is 6 lakhs, exempt supply is 4 lakhs. So you segregate the input tax credit. You can't identify how much has gone to each unit. So you segregate on a rational basis the total input tax credit available during the month, divide it in this ratio. Now, when this comes in, the question that comes is, how do I optimize my cost? How do I charge GST to the members? Now, let us say the same example of 100 apartments and they want to charge per carpet area. And they have worked out, let us put a simple math. Let us just put a simple, okay, Gautam has raised the hand. I'll just take the questions in a way. Let us take a simple math. I am incurring my monthly cost as 4 lakh rupees and I have 1 lakh carpet area. Each house average, I'm just taking 1,000. So approximately 4 rupees per carpet area is my cost. And I have houses which has 2,000 SFT. I have houses which has 2,000 SFT. When I say 2,000 SFT into 4 rupees, which means I'll collect 8,000 rupees. And I have houses which has 1,500 SFT. And 1,500 into 4, I'll be collecting 6,000 rupees. Now, question to all of you, is it right on my part? Saying that Those which are more than 7,500, all those have to pay 8,000 plus GST. In this example, 2,000. So is it right on my part to say that you guys have to pay 8,000 rupees plus GST, and others, I will say that you will have to pay only 6,000, no GST. It is 6,000 and no GST. So GST is nil. Can I collect like this from the members? Is this valid? The question I have is, if I put that 4 rupees per carpet area and I'll be collecting 8,000 plus GST and 6,000 without GST, given this is the example, my question is this collection which I am doing, is it correct? Is it justified? I want your answer in the chat whether yes or no. Okay, I got 2 yes. Gautam says yes. Ravi also saying yes. Ashika, would you like to take up this part?
Yes, sir.
Okay. So I invite my colleague Ashika to give her view as to whether this would be yes. Maya saying as per GST rules, we have 2 for above 8,000 rupees. Maya, the 8,000 plus GST is correct. My moot question is, I am collecting 4 rupees same for the person who is taxable, for the person who is not taxable. So if I am saying 4 rupees plus GST rate is 18%, which is 7 rupee 20 paise, sorry, 72 paise, which means I will be collecting 4 rupees 72 paise from the units above 2,000 square feet, and all other units I am collecting 4 rupees. Now, out of there are 100 flats, some flat owners are paying because for them it is like monthly pay I am doing. So some flat owners are paying 4 rupees 72 paise. Some flat owners are paying 4 rupees. The question is it justified? Is it right on my part to collect 2 different amounts from the flat owners who are staying in the same premises? Or alternatively, should I say, okay, there is someone has to pay tax, someone no need to pay tax. Can I collect as 4 rupee 50 paise for both units? Can I say that 4 rupee 50 paise for both units? So again, I want to put a question to the poll. I want everyone to think and say which is the right answer. Let's say 4 rupees and 4 rupees is option A. 4 rupees 72 and 4 is option B, and 4 rupee 50 paise is option C. Which among these options you choose the right answer? Gautam says option B. So we have 3 options. Option A, 4 rupees, 4 rupees. Option B, 4.72 and 4. Option C, 4.5, 4.5. Okay, 3 people tending towards option B. Bhaskar says no, it has to be option A. All right. So with little change in the fact in the thing, some people have a different opinion. Now let's look at practically. I have Ashika who has a case to be presented to you. Ashika, over to you. Can you share what is your view on this?
So this sheet screen is visible.
Yes, it's visible.
Now taking through different scenario. Scenario 1, where we are saying that we will only charge whenever we receive any maintenance charges. Obviously, there is a GST component included in it whenever our supplier is charging to us. So in this example, suppose 19 lakh is what the maintenance charge is, on which GST is charged 3 lakh 53. and total cost is 23,18,000. Now, like for scenario 1, if we have taken some numbers of flat based on certain assumption. Now we are assuming that this is the total number of flat 376 with different specification and different square feet. Now based on this, 23 is my total cost and my total square feet is 6,29,000. Now one way is I ignore GST and on this I charge to my flat owners. That is, like in the example we taken, whether we should charge 4 rupees to all or whether we should go for 4.72 and 4 or how we should apportion our cost. Now, if we go by the rate, ignoring GST, and we charge only 3.12, so we will be able to recover 19,64,000 from our flat owners. Now, out of this, if you will see, starting this, all are falling under exemption. So there cannot be any tax collection from the flat owner as they are all below 7,500 per month. So no GST you would be charging from your flat owners. So as you will be charging 19,64,000, so your exempt will also become fully will become exempt. This GST, ITC will not be eligible as all are below 7,500. So all will become your cost. So there will be a loss in your balance sheet of 3,53,000. Plus, if we see, come to your cash flow statement, as I have recovered only 19,64,000, but if you will see my expense side, including GST, my outflow is comparatively more than inflow, which is not possible. It's like from out of pocket, you have to bring it in the association and pay it, pay the expenses incurred by the association. So we can't go for 4 rupee rate, which we discussed. Now coming to another scenario where inclusive of GST, because actually my total cost is 23,18,000 only. This is the total cost as an association is bearing. Now based on this, how much I should charge based on per square feet to my flat owners. This is cost. Out of this, you will see first 4 are falling between 7,500. So my exempt will become and my taxable will become only this. Now, in this exempt, I am not going to charge GST from my flat owners because it is below 7,500. Now, as on exempt, I am not charging GST. Proportionate amount of ITC will also be disallowed on this exempted part. Though I have a GST expense of 3,53,000, but I won't be eligible to claim ITC of 3,53,000 as I am liable to pay tax on only on 5 lakh. So on 5 lakh, 18% GST I have to pay. My ITC I have to calculate proportionately. That is total turnover divided by taxable turnover. So till 77,000 I am eligible. 13,000 it's need to be paid. So again, coming to profit and loss account, if you will see, my expense is what is my maintenance charges. My ITC expense, the expense for which ITC I'm not allowed to claim. Obviously, I will charge off to my PL. Then taxable income 5,06,000, exempt 1811, and this is what my profit will be, 77,256. So in the first example, if you are collecting without considering GST from your flat owners, you were suffering loss and you were not having a cash to pay out your outflow, pay out your expenses. Now in this second example, when we are considering with GST, in PL, we are getting a profit of 77. But when we come to cash flow, I am receiving this amount from my exempted below 7,500. This is from my taxable. And on that taxable, I am receiving a GST of 91,000. Coming to expense part, 2318 I have to pay. Plus this GST cash also I have to pay from, because this much of ITC I can't utilize toward payment. So this also I have to pay. So over here, my cash flow is 24. Inflow and outflow is 23. So you are having an additional inflow of 77,256, the profit which you have made. So whenever you are calculating for the purpose of optimizing cost, you have to make sure first thing that you have to consider whatever expenses incurred for common use of the association members. It should be always considered inclusive of GST, so that then the per rate which you have arrived, you should divide it. Based on that, you should identify the collections which are falling below 7,500 and above 7,500. Now, which are falling below 7,500, that will obviously fall under exemption and no GST you will be charging. And to the extent of that ITC which is not eligible, need to expense off to the PL. Now, where it is exceeding, obviously you will be charging GST from those flat owners and you will be paying it to the government. And to the extent of taxable, you can utilize the ITC. Now, but in this, when we see rate per square feet, they are not on equilibrium. If we will see, though I am collecting from exempt also 3.6 rate, but from taxable, I am not collecting at the rate of 3.68. I am from them is charging payable. The GST which is payable from them 0.14. So for them, the cost has become 3.83. So there is a difference between what has been charged from exempt and what has been charged from taxable of 0.14 paisa. So over here, though amount is appearing to be small, but if we do by per square feet, it will be high. Now, how you can optimize it so that both exempt and taxable contribute the same amount? So in that case, there will be no additional outflow.
That's okay, Ashika. I think you can change it into absolute value. So Ashika is trying to do an iteration where how to make the collection is uniform to everyone. Okay. So let me take over from here, Ashika. Wait. Okay, so now what Ashika has done is an iterative model wherein she tried to brought the best of the possibility. Let me just now take over the screen, and just now I want you all to focus on only these two numbers, 368 and 318. So for the members who are exempt, they would be paying 3 rupees 68 paise per square feet. This is the per SFT. GST from them will be nothing. The total collection would be 3 rupees 68 paise only. And for the members, which is more than 7,500, and she the taxable units. So she is saying that, suggesting that you collect 3 rupee 18 paise. It's not she is suggesting, that is done by the system. And if you apply 18% on this, is it is 3 rupee 75 paise. In a normal course, if you see on 3 rupees 68 paise, if you apply 18 paise, it would be 4 rupee 34 paise. As against 4 rupee 34 paise, you are collecting 3 rupees 75 paise from the taxable members and 3 rupees 68 paise from the exempt members. By doing so, she has also done that there is a GST input tax credit and GST cash that is paying. The cash flow wise, if you see, the inflows to the association is 23 lakhs 28,000. Outflows per month is also 23 lakh 28,000. So just to tell you what was the attempt done to achieve this. Whenever I'm buying some goods or services, it is applicable both for the taxable and exempt. I am not eligible for the input tax credit for the units which are exempt. That means a portion of my input tax credit, I have to charge it to them. And those which is towards the taxable units, I am eligible for input tax credit. However, out of 100 rupees I am procuring, I am also collecting from 100 rupees from members. But if you see, my input tax credit could only be for some 60, 70. So proportionately, my reversal of input tax credit is not at the same level of the output levy which is happening. So it is been optimized in a way where so that there is no financial burden. So saying 4 rupees to both the parties is also not right. Or dividing it in the ratio of 4 rupee 50 paise, 4 rupee 50 paise, not right. So work out such a way that the burden of input tax credit where benefit is available, pass it to those members, collect the GST, offset and give, and those it doesn't work to them, pass it on to them and add that to the pricing. So you will be collecting 3 rupees 68 paise from exempt. Now you may say, am I collecting more amount from the people who are not under GST? Answer is yes, you are collecting more rupee before GST. But if you look at after GST, it is 3 rupees 68 paise and 3 rupees 75 paise. This amount of work, definitely every RWA should make a work wherein the you are doing the equity treatment to all the members. I think for some of you, you might have lost looking at those multiple iterations which Ashika has brought in, but I want you to really think through and get the concept in it. And Ashika, thank you for bringing up this Excel into very beautifully and very like I know that a lot of math that went in, but I want every association to relook at those numbers and work on it. With this, we have come to end of the presentation. Ashika, anything you would like to add?
No, sir.
Okay, great. Rajesh sir.
Yeah, I think Venu, the presentation was fantastic. There is nothing much to add for me because you have covered all the aspects in detail. I know a person who handling litigation generally want to bring in that litigation perspective always.
Okay, before Rajesh sir says something, I would like to add one point here is though we both sit in the same office, work together, kind of opposite poles. So if you have a notice and there you see that there is no levy, like I am saying that tax is applicable on entire amount over and above 7,500. And if you have not paid and you paid only on 500 and you have some notices to handle, the right person is there on the right side of the screen who says that I'll defend for your case. So Rajesh sir handles all the litigations at the tribunal level, and he got quite a good favorable judgments. Yeah. So over to you, sir, to add points.
Yeah. The thing is, I think this Venu was mentioning about that subclause EAA, which was introduced later. That came in later, but with a retrospective effect. Many of the associations would have not paid the taxes in the past. In fact, the latest decisions in the 50th GST Council meeting gives us a ray of hope that, many cases wherever the interpretational issues were there and the taxes were not paid, the council was at least graceful enough to accept those interpretations and say, okay, past will not impact you, don't worry about it. So we'll give you a relaxation, and is coming out with a lot of exemption notification in that context. Not at least some of the exemption. My suggestion would be to basically through all your associations and the consolidation of all your association. I understand that there is a association of all the associations. I think Vinay was mentioning, other partner was mentioning about it. Through them, probably a representation should go. For those periods, a relaxation be given as to whoever the associations have not paid taxes, they be given a relaxation. Point number one. Point number two, the 7,500, whether once I am collecting 8,000, whether it's only the 500 rupees or 7,500. Venu clearly mentioned the matter is under debate. Yes, but many associations would have followed it if they've paid only on 500. Isn't whatever the consultation. I'm not here to say which is right, which is wrong, because it can be argued either way. So that being a case, my suggestions to the members over here is to please look at it. If it is not paid, not collected, and you're taken a stand that we are going to defend it, because the term use is up to, again, when you can go for a representation to the council, asking that, okay, past these interpretations were there, wherever somebody has not paid, so give a relaxation to that effect. This is another request which you can make to the council for relaxation, because it's not an individual gain to the place, for the society, for the residents. These benefits are being sought for. So in the lack of clarity, all these confusions have been there. So please do give a representation. Is the second point. And the third point, I think I don't understand all these complexities of the Excel workings, which Venu and Ashika did. My simple calculation is, okay, there's some savings which has been made with respect to the flats where they're paying output tax, the corresponding input tax is being availed. That is a I mean, putting in a very simple words for the understanding of the people who couldn't understand, like me, the complex Excel sheet. So the extent of the benefit which the association is going to get should be passed on to all or to the members who are paying the tax. Obvious answer would be it should be passed on to the people who are paying the output tax GST. The real practical challenge do comes is how do I ascertain in the month in which I actually pay? So, couple of associations, to my knowledge, what they've done is in the first month, say this is the first month of operation, assume they're paying, collecting whatever the Venu gave an example, 4 rupees, 4 rupees. They will collect the tax on 4 rupees from the people who are taxable. Later on, in that month, whatever the input tax credit benefit, which is effectively availed after reversal, that benefit is divided into the number of, the square feet of the taxable area and reduced in the next month. So next month calculation, the basic value will get reduced and a corresponding output tax will automatically get reduced. So this is some associations have adopted a simple method without getting into this calculation. Obviously, the point is to be taken is there is a benefit. It is not that you cannot collect on the gross. Some benefit has to be passed on. The methodology, basis, working is a matter of a decision which you may have to make with all these workings. Sometimes it also happened 4 rupees, whatever the number of units, the square feet which Venu was mentioning, it was reaching 8,000. Now, in the next month, I gave a rebate of the previous month. My maintenance charges came down to less than 7,500. So I need to be given exemption for that month or not is again a debate which came up. So these are some practical issues which are going to come up. But in sum and substance, the benefit of those credits should be passed on. And the next thing is whether it's principles of mutuality, whether still has any ray of hope under the GST law. The government is very, very clear that they want to tax this particular sector as well. The approach of the government appears to be various input services which are received by the association already it suffer a tax. So effectively we are not burdening to the extent of 18%. It may be 2-3% is what the story from the government side, but practically it may be very, very what I can say on the paper theory, but in reality the cost is definitely going to go up because there are various employees costs they would have not charged. There may be a service provider who are small who has not charged GST, but when I collect from the customers, the members have to charge. Is one more thing. One more point, I think Venu, I don't know whether he brought out because I missed some part of his presentation, that clause B or C of that particular notification, which talks about exempted supplies procured and supplied would be also exempted. There is no monetary limit per se attached to it. So probably there is some element of debate and discussion on that aspect of it, which is a debatable. I'm not telling that it is fully clear aspect of it, but if the extent of any exempted services which is supplied by an association members would be exempted. So that also to be kept in mind while whether water supply is a composite supply or is an independent supply, all those questions comes up. These are all the issues which many associations do raise and do come across. So in sum and substance, please do not get into litigation because it's a costly affair. If it comes up, anyhow, you have to handle it. That's all. Right. Over to you, Venu. Thank you.
Thank you very much, sir. And in between, Mr. Gautam had raised a hand. Sir, yes, you can.
Yeah. Can I have a question?
Yes.
See, my maintenance comes to around, say, 6,500 per month.
Yes.
None of us come under GST. But however, for that particular month, if I book the clubhouse, my clubhouse charges are 3,000 or something. So the total cost is 7,500. Is the GST applicable only on the clubhouse charges or on the total for that particular flat?
Sir, is clubhouse applicable to every member, irrespective of number of people and there in the clubhouse?
No, my query is very clear. This is booked by a resident, one flat owner, for his personal function.
Oh, you are saying it's a unit that is booked by
Yes.
a function hall that is booked.
Yeah.
Correct. For
Yeah.
that particular month, it is once he has booked for that month. So it crosses the total 7,500. Is the GST applicable only on the clubhouse fees of 3,000 or 3,000 plus 6,000 of the maintenance?
Okay. When I'll answer that.
Okay.
I think Mr. Gautam Venu explained very clearly. This whatever the activity or the collection from an association to the members had to be taken into two different classes. Okay, class one, sharing of the expenses, maintenance charges. One. Second, based on the specific usage you pay to the association. Based on the specific usage, what you pay is an independent supply, and that doesn't get counted as to the 7,500 at all. It's an independent supply. That independent supply is taxable irrespective of whether you're less than 7,500, more than 7,500 that is how we need to look at that. Okay.
Yeah, I got it. So because we have not been charging GST for that particular things.
Yeah.
So we may need to start that. Yeah.
Provided your total collection is much more than 20 lakh as a overall.
Yeah. Ours is around 1 crore. Yeah.
Okay.
Ravi sir, you have raised in Ravi.
Just a small thing. Ashika has presented very well. However, we are not into accounting, so it's very difficult to understand. We'll work on this. This is a good input to use the ICT and bring down the maintenance cost to each individual exempted and non-exempted unit. This year, we are looking at some of the apartments going into non-exempted level. So we'll have to work on this.
Absolutely. True. Thank you.
Mr. Ravi wants.
Yeah, good evening. Good evening. Can you hear me? Okay. See, ours is a 150 house housing complex, and none of the house are, the maintenance bill is coming up more than 6,000 rupees. The maximum is 6,000 rupees coming up. The first point what I want to ask is, do we need to, register the GST registration is a must? Because we are the first RWA which is taking over the operation of housing complex. I'm a president of this RWA, so I just want to know whether the GST registration is a must or not. The first point, and the second one, our builder has not collected the corpus fund. Okay, while reading the property, now it is a responsibility of RWA to collect a corpus fund for future expenses. So how do we go about it?
Okay. So though every house is less than 6,000 is, let's say each house is 6,000 rupees, which means you are collecting 9 lakhs per month, and annual maintenance collection is 1 crore 8 lakhs. Technically, though it is more than 20 lakhs, you are not required for registering under GST. However, under GST, the turnover definition for registration is 20 lakhs taxable and exempt supply together. Your exempt supply is 1 crore 8 lakhs. Now, you may also have to consider, like as Mr. Gautam Kamath has raised, that there is a clubhouse, I'm charging separately for clubhouse, or there is a community function hall, I'm charging separately for the community function hall. If you are charging something separately over and above that, let's say out of 1 crore 8 lakhs, whole of the during the year you are receiving 2 lakhs, some other miscellaneous taxable income. You still have to register for GST and discharge GST only for the 2 lakhs you are obligated to register. That's your that answers your question number 1. Is this clear, sir?
Yes, absolutely.
Question number 2. You are collecting, apart from monthly maintenance, I am collecting towards sinking fund, corpus. Generally, there are 2 practices most houses follow. They may say that monthly 6,000, what I will do is I will collect 1,000 rupees over and above that, the 1,000 I will add it to the corpus. Or once in a year, they'll collect, let's say, pay 15,000 rupees every year each house. So after 5 years, it becomes a corpus. Please note, anything you are collecting separately towards corpus is also leviable to tax. A question that comes is, should I pay tax at the time of application of that fund, or should I pay tax at whenever I am collecting in advance? Section 13 of the GST Act says levy of GST would be there even if you collect in advance. But here you don't know whether this money would be applicable towards painting or other services. The pure answer to it is applicable. How, when it is contractual, we got to look at once the association documents. Second, you also have to look at the mode of collection. Are you collecting yearly ones or monthly? If you are collecting monthly as a part of maintenance, you will still be within that limit of 7,500 and you will be outside the levy of the tax net. And for the purpose of the, there are some apartment associations which collect instead of monthly, they will collect on a quarterly basis, or someone semi-annual. So once in 6 months, 3 months, whatever be the period you are collecting, still you have to average it. Let's say in for first 9 months, I will collect at 6,000 rupees, and last 3 months I will collect at 10,000 rupees. Still you got to average and see what is 7,500 per month should be seen. It's not that exemption is there for first 9 months and the other 3 months it is taxable. I think these are more into edge cases, I will say. Case to case specific, we have to look at it and answer. But the plain answer to just to simple is say even sinking fund, corpus fund collection would be taxable. At what point depends on situation to situation.
So that means, see, actually, we are thinking of collecting a 50,000 rupees in 3 installments. Maybe for this year, another 25,000, this financial year, 25,000, next financial year, 25,000, as a one single installment. So that means, according to your explanation, it is, GST has to be collected on 25.
Yes.
Okay. So is there any way we can avoid it?
Offline.
No, sir, no.
It has to be transactionalized. So there cannot be. I am not saying that tax has to be avoided, but tax can be planned.
Can I answer that? What we are doing? We are also collecting. We plan collection of 60,000 rupees over a period of 4 years and distributing it at 1,250 rupees per year, so that we don't cross 7,500 per month.
Okay. That's a good idea. Thank you very much.
I think there's one question in chat box where, as to the pure agent concept. I think you explained the beginning of the session, the difference between a pure agent vis-a-vis the sharing of expenses. I think maybe we need to highlight on that.
Yeah, so so let me tell you what does the pure agent, because many of the people think that why can I have my electricity and water bill separately obtained? I will collect that money separately, or things like that. The answer for that is no. What the pure agent would applicable is, if any flat owner is not living in India, it is being vacant, he is requesting the RWA to pay the gas bill or the cylinder or the electricity or some property tax of his unit, and he is paying it to the association along with the monthly maintenance. Only that will be treated as pure agent, and it is no way, it's RWA is doing a payment as a members. Only that would be outside the levy. Rest everything would be part of the levy.
I will put it in very, very simple language. Say myself and Venu, I am taking Venu to one hearing. So it is my responsibility to take Venu to hearing. I am supposed to pay the auto charges, the cab charges on the way, but I don't have money. I ask Venu, please pay this. Anyhow, you are going to bill me. Include that in the bill, and I will reimburse that. So basically, there should be an obligation on the part of that one person, which is paid by the other person and claiming that money. It's only a money transaction which is paid is to be called as a pure agent concept of a reimbursement. Otherwise, it's very, very difficult to claim that as a reimbursement. Especially the common area, electricity and water is very, very difficult. I mean, not difficult, it's not possible, but we can, litigation always is there on that. Because many of the association have been probably misguided in my view by saying that segregate water, segregate electricity. Again, water electricity has got two different aspects. One, going into the house, another going into the common area. All those issues are there. There's no universal answer to it to that effect. Okay. I think everything we answered.
You actually exceeded the time, but yes, thanks to RERA consultants for ongoingly doing these sessions. I think from over 1.5 close to 2 years, they've been doing this session every month on one or the other topic, and in association with NAREDCO, definitely a good job. And Rajesh sir, like every time your litigation legal angle will give a thought-provoking thing to the members. And Ashika, thank you for the complex Excel. So on this note, we have come to end of the session. We registered people, you'll get the copy of the presentation to the email ID, and feel free to reach to us for any more answers that you might have specific.
Dear
We
speakers,
conclude the session. Thank you.
Thank you. Over to
dear speakers, thank you for your valuable time and educating us on GST applicability for Resident Welfare Association. Dear participants, thank you for all of your participating in the session. Hope the session was informative and knowledgeable. If you have any queries, please do contact us. Thank you. Have a nice day.
Thank you.